Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Join our community to get the risk reduction checklists I created from the lessons I've learned from all my guests. Also, claim your special discount on my 6-week valuation masterclass bootcamp, where you'll learn how to value companies like a pro and advance your career. Go to myworstinvestmentever.com to join for free. Fellow risk takers, this is your worst podcast host, Andrew Stotts from A Stotts Academy, and I'm here with featured guest, Kittisak Kovintavewat. Kun Kittisak, are you ready to rock?
Yes, Sawadee krap.
Sawadee krap. All right, so let me introduce you to the audience. Kittisak is a value investor who focuses on investing in value stocks in the US and China. He has been investing in the US for more than 7 years and runs the Billionaire VI page to help investors to invest following the value investment style. Kittisak, take a minute and fill in further tidbits about your life.
I am the investor, and I also work as a company in IT industry. I've been investing since 1999, so now it's about 22 years already. I'm so happy to investing every day and also share my learning, my knowledge to the community. Thank you for inviting me today.
Yeah, it's great to have you. And I have a question for you. I started investing in the stock market in 1993. And I saw that my mind changed a lot over time. What are some things that have changed, and what are some things that have stayed the same for you in the way that you think about investing, in the way you think about stocks?
I must say that my idea, my learning is that I think the way to invest have changed for myself. At the beginning, from 1999, I invest without knowing anything about the company. I know about news from my friend, my family, and I just invest. For the first 10 years, I get nothing. Sometimes I make profits, sometimes I make loss, but it is equal. So in the past, it's about knowing nothing to invest. But since 2010, when I searched over the internet to find out how to become the successful investor, I found many interesting books for the value investor. I learned and I study Dr. Nivet book, Warren Buffett and Peter Lynch and many other about the VI, value investor. Then I become the value investor since 2010. Then my investment philosophy have changed. I study a lot about the company. I must know that before I invest. I know about how they make money, what they are doing, what the risk, what the management team, and also really important thing is about the pricing. As you mentioned that to invest and successful, you must invest in the very good company with the very less risk. That comes with the mentality to get into the position when the price drop a lot, but the quality of the company is still the same. And that's called the value investor. So in summary, things have changed and I become the value investor. And I love to be this mentality and VI.
Fantastic. Yeah, it's amazing how much we learn over the years. And I think that's what makes investing so fun and finance so fun, is that it's endless what we learn, even, as the longer we're in it, we continue to learn. So that's, really exciting. And I think for the listeners out there, that's really the challenge. It's a journey of learning. And when you're learning by investing, the learning can be really fun. And if you don't learn, it can be really painful. Well, now it's time to share your worst investment ever. And since no one goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it, and then tell us your story.
Wow, it's really interesting question. I'd like to share that my worst investment is in 2014. At that time, I look at the company called Thai Airways. I think everybody know about this company. and many wonder why when I become VI and why I invest in this company. At that time, I study this company and look at the past. Every time the oil price drop down, the stock price will go up much higher. And in 2014, the oil price dropped from $110 per barrel to $53 per barrel within a short period. So I checked the company and do the deep dive into the Excel file. I found out that that cost is of the oil price is about 40% of the total cost. So it means that if the oil price cut off 50%, they must have been profit for sure. This is my understanding at that time. So I open the Excel file and do some homework. I see that their revenue in that year is about 200,000 million baht. So I look at the net profit. They normally have 3 to 5% of the net profit. So if I use 5%, their revenue net profit will be about 10,000 million baht. And then to calculate the earning per share is get to the 5 baht per share. And I look at the PE in the past again. Important thing, if you look at the past, we use the past information to forecast for the future. I use 10 multiple times with the 5. So I think the appropriate price for Thai Airways at that time, because of the really low price, oil price, it should be 50 baht. But at that time, it's about 15 baht only. So you can earn 3 times, right? From 15 baht to 50 baht. Then I started invest on that price. You know, after I invested, it started getting good because its price go up in the short term to 17, 18. I'm happy. But since then, a lot of bad news keep coming. They have ICAO turning a red flag for Thai Airways. They may not be able to land it to the US or European countries because of the standard. And also many things happen about the problem in the organization. The price went down, keep going down from 15 baht to 10 baht to 9 baht. You know, at that time, sometimes I cannot sleep and thinking I will make a huge loss on this one. So I decided to sell off the position at 9 baht. And then, can you believe that after I sold, I don't know what happened. The good news keep coming. The government turned to the company and help supporting, and also they have some of the restructuring news. That's a good news. The stock price went up to 30 baht within the couple months. I can see that I make loss, and also I lost the opportunity to make some profit, to make the huge profit. So and this.
How did you feel at that time? I mean, it's such a frustrating type of situation. I'm just curious, how did you feel?
Absolutely, I must feel really sorry, really sad that I saw it before the price went up 3 times. But I can control my emotion and look forward instead of looking back, and look forward to find any other opportunities, and that lead to investing in the US in 2015.
So tell me what lesson, how would you describe the lessons that you learned from this?
I would say I learned 3 things from this lesson. The first one that I learned, we shouldn't speculate in the stock, but to invest in the company. The speculation always look at the price in the short term. Whenever you invest, you want the price to go up and you just sell it to make the profits. But invest at the company, as the owner of the company, you must know a lot of things. As I mentioned, the background of the company, how they make money, even the management team, you need to understand deeply. And also the valuation. That is very important things that I learned. Secondly, I learned about that we shouldn't invest in the turnaround company. As Warren Buffett mentioned, the turnaround stock never turn around. Even though in the past years, we can see that some of the logistic company, some of the commodity stocks went up a couple of times in the past year. I say to myself that it's okay. It's not my type of investing. I invest for the long term, for the long and stable company, which has a high moat, and not invest in the turnaround company anymore, because it's very hard to predict when they're gonna turn around. And when the fear coming in, you have a high potential to sell the stock before it's turned around, because the price going very deep and you cannot resist to sell. That's the second thing. And the last thing is that the investment sometimes is about the timing as well. So I learned that I should invest as a long term, as the owner of the business. Look at the Thai Airways case. If I just invest and think that if you turn around because of the fundamental, we go back to the same, even it doesn't increase the revenue, I will make some money on that. But I thinking very short term and I make loss. If I thinking a long term, I think I would make some money on that case. So this is much what I would like to share about my learning from Thai Airways case.
It's a great learning, and maybe I'll summarize a few things. I was writing down some things as you were talking, and one of the things I thought about is that, you know, what you were doing kind of wasn't really investing in a company. It was like investing in an oil play.
Yeah.
Like a theme. And then it made me then think about how sometimes when we think we know that a particular factor is going to drive the share price or drive the performance of the company, we can't capture every factor. So sometimes we get a surprise factors that's coming in. Like in this case, it wasn't just oil, although later, you know, maybe that helped. The other thing that I take away, I wrote down, find your style. You know, you were really in a process of finding your own style. There are people that like turnaround. They love that feeling and they love that, you know, very focused, but it's not your style, and you learn that. It's not my style either so much. But I think for the listeners out there, the lesson is Kittisak has told us about kind of exploring really is what you were doing to find your style. And so I think that's a very important lesson. And the last lesson is a while ago, I did a study where I looked at the return on invested capital, ROIC, of about 10,000 companies across the world. And I broke them into different groups. And the top group, the best performing, were stars. And the bottom group were dogs. And what I saw was that over 10 years forward, stars would fall, but not to the average. They would stay above average. And I saw that dogs would rise, but that they would remain below average as a group. You know, some are turning around, but most are not. And what I learned from that was dogs are always dogs. You know, it's a general rule. It's not always the case. And so you reminded me, you know, Thai Airways is one of those companies that just always struggled over the years. Is there anything you would add to that?
I strongly agree with you that the fundamental things is very important. And about the type of investor, I would encourage everybody to invest and learn from the investing, the real case. So you will know your style and you adjust it. And when you know your style, you tend to be able to know better about the company and invest higher amount to make a better return.
And can you explain what it is that people get when they go to Billionaire VI? I know you've got a lot of followers in Thailand. What do they get there? What do you like to share with them? How does that, tell us more about that page.
I think I would like to share that the reason I set up the page is to help Thai people to invest abroad. I start with investing in US. I want to help Thai people, at least 100,000 people, to make 1 million baht per person. So our country can make at least 100,000 million baht. It's like an income for the country, like the Philippines, as you may know. Philippines, they have export workers, like the teacher, the linguistic, to earn like 600,000 million baht per year. That's their income to the country. So with the economy in Thailand in this situation, I would encourage and would like to help more of the Thai people to understand how to invest in the value investing way in the US and China market, and telling them about the case study in the real stock, how we look at the stock, how we do analysis about the price, about any trend or any news, and also sharing about the notions also how the famous investor like Warren Buffett or Charlie Munger, how they think about the investment. They think about invest at the company have the durable competitive advantage. They look at the company who has the very good price, have a high margin of safety, something like that. I love to share about Warren Buffett, and I think my fan page every time they love learning about Warren Buffett. You know, I went to Warren Buffett house in the I think last year. I went to Warren Buffett house. I went there alone. I went to their house to take a picture,
Right.
and also went to his company building as well, and just to follow the step. I went there in February. It's not the annual meeting time, before the COVID happened in March. So it's like my fan page love to learn more about Warren Buffett. That's why I went there, and also I love to watch the annual meeting over the online meeting, even though it's a late night, 2 a.m. in the morning. I think I'm the first one in the country who, after the end of the meeting, I summarize everything and share about 7 o'clock in the morning.
Oh my gosh.
I love this, and I think the response is really high. So I believe that my fan page is also have the same mindset as myself to be the value investor.
We call this a pilgrimage. When we go to the place that we really want to see the person, you know, so it's like going in for Muslim people to go to Mecca. The pilgrimage is to go to see Warren Buffett. So that's very cool. And I'll have the links in the show notes for the listeners out there, so you can click on those links and go check it out and see what you can learn. So let me ask you, based upon what you learned from this story and what you continue to learn, what one action would you recommend our listeners take to avoid suffering the same fate? We don't want them to lose money.
I would say that there's so many things to advise to succeed the investors. But from this case, I think the main principle, the easiest one, is that I would encourage everybody to understand the difference between speculator and investors. As I mentioned earlier, speculator is always finding the price and making the profit when the price increase. They just buy and sell in the short term. They don't want to know or study about the company. Sometimes I ask them why you invest in this company. They said they don't know. They just heard the news that the price will go up. I said, how you confident the price will go up? He said, it should go up, some kind of that. So this is kind of the speculator. And you know, this kind of the speculator in the market, the successful people is about 10% only. That be success. And I believe the successful come from mostly on the value investor, which is the second thing is about being the investor. You must know the fundamental of the company. If you are the investor, you will allow your time to study more on the company, because you are the owner. You must understand what your company doing, what your company is selling, and you have the mentality to hold the stock in the long term. Even though in the crisis coming, like the COVID or hamburger crisis, you just stay tuned, didn't do anything. But when the crisis passed, the stock will come back and go up again. So this kind of the owner mentality, I would encourage as part of the being the investor. So in summary, I would like everybody to understand this difference and learn more about being the investor, and you will be successful for sure.
Fantastic. And it's great to have that feeling like I'm an owner rather than just trading the price. I think it's such a good feeling. And I tell No matter whether you're investing in individual stocks or you're holding some mutual fund or something, you still are an owner in businesses. Somebody asked me about, what do we invest in inflationary time? And I said, look at the companies. They all have a CEO and they all have a management team, and they're working as hard as they possibly can to reduce the impact of inflation, for instance, on their profit margin and on their growth. They're working so hard. And when you own a share in that company, you don't have to contribute to that work. You just can enjoy that work. So when you pick a portfolio of stocks, you get the benefit of some really hardworking teams. And that's why equities and stocks basically end up being great performers over a long period of time. All right, last question. What's your number one goal for the next 12 months?
My personal goal is to be successful to develop and growing my portfolio. Every year I set up to growing about 20% every year. And I can do that in the past almost 10 years since I become the value investor. In the meantime, I also would like to give and sharing more knowledge to the society as the VI. So I may be doing more on the podcast or videos or even the events.
Right. Fantastic. Well, listeners, there you have it. Another story of loss to keep you winning. My number one goal for the next 12 months is to help you, my listener, reduce risk and increase return in your life. To achieve this, I've created our community at myworstinvestmentever.com. And when you join, you also get that special discount to my 6-week valuation masterclass bootcamp. As we conclude, Kittisak, I want to thank you again for coming on the show. And on behalf of A Stotts Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
I would say that I think the most important thing now is to stay safe, because if you get sick or you get COVID, you cannot invest, you cannot make money. So I think in this time, you stay safe, take care of yourself and your family. I think the best one. And the another one is to be the intelligent investor. As I mentioned, to be intelligent in investing is very important. You must learn to read a lot of books and reports. The successful investor that I know, they study over 12 hours a day. They study a lot of things, not only the news, they read the annual reports, they read the books, the strategy book, the investment books, something like that. So I think to be the intelligent investor, you must be very diligent, work hard, and you'll be successful. Believe me.
Well, that's a wrap on another great story to help us create, grow, and protect our wealth. And as Kittisak said, our health also. Fellow risk takers, this is your worst podcast host, Andrew Stotts, saying, I'll see you on the upside.